Welcome to video 1.4, Limited Liability Companies, Flexibility and Tax Elections. If you had to pick one business structure that offers the most flexibility and benefit for the widest range of businesses, it would be the LLC. LLCs combine the liability protection of corporations with the tax flexibility of partnerships, and they offer additional benefits that neither partnerships nor corporations can match. Whether you're a sole entrepreneur, planning a multi-member business, understanding LLCs is crucial for making the right entity choice. Some important educational disclaimer: ProfessorVillar.com is an independent educational support service and is not affiliated with any educational institution. Students enrolled in academic courses should continue to communicate directly with their professor through their institution's official learning management system or institutional email. Content here is for educational purposes only, and while RTH Worldwide LLC may offer professional services through YourAccountantsUSA.com or TusContadoresUSA.com, the use of educational material from ProfessorVillar.com does not establish any professional engagement or contractual relationship between you, our business, or professors. Welcome to video 1.4. We're exploring the limited liability companies, or more commonly known as LLCs. By the end of today's class, you'll understand the flexibility, why the LLC has become America's most popular business structure. You'll be able to describe the formation process. We'll compare single member LLCs to multiple member LLCs, identify the default tax treatments, talk about calculating the self-employment tax savings if you are taxed as an S corporation, which is an option available to limited liability companies, understand the crucial importance of LLCs operating agreements, and then we'll evaluate the different LLC management structures from member managed to manager managed structure. LLCs have become America's most popular business structure, and for a good reason. Available in all 50 states, they offer a unique combination of benefits. You get liability protection for all owners. In the LLC, the owners are called members. You get flexible tax treatment with multiple options. We'll explore today some of those options. Formation is fairly simple, and ongoing maintenance is minimal compared to corporations. You can structure management however you want, as a member managed, manager managed, or even a hybrid approach. And limited liability companies provide business credibility with customers, vendors, lenders, while still being simple to operate. LLCs are often called the best of both worlds, where you get liability protection like a corporation, but the tax simplicity of a partnership. And by the term simplicity, I mean flexibility. Florida makes LLC formation relatively simple and inexpensive, which is why they're extremely popular for small businesses. LLC formation is straightforward. In most states, you file articles of organization with the appropriate state agency. In Florida, that's the Division of Corporations, part of the Secretary of State's office. You pay a filing fee, $125 in Florida, which is fairly reasonable. Some states will charge as high as $500. You need a registered agent with an address in the state of formation. This can be you if you're a Florida resident, or you can hire a service. While not required by law, I strongly recommend creating an operating agreement, even for single-member limited liability companies. The process will typically take somewhere about a week to 2 in order to get legally structured. The number of LLC members affects both operations and tax treatment. Single members LLCs have one owner and are treated as disregarded entities for tax purpose. meaning that the LLC is ignored and you report your business income on Schedule C if you're a sole proprietorship, or in the corporate owner's personal business income tax if it's owned by a corporation. While you still get the liability protection, which is huge. This is a huge advantage over an actual sole proprietorship. Multi-member LLCs by default are treated as partnerships for taxation purposes, with all pass-through benefits and K1 reporting that we discussed in our previous video regarding partnerships. Beauty is that if you start as a single member, later add members, the tax treatment changes automatically. Or if members leave and you're down from a partnership down to single member, you automatically convert back to a disregarded entity. For single member LLCs, the default federal tax treatment again is a disregarded entity. Again, IRS will ignore the LLC for tax purposes, treat you as a sole proprietorship. You will report this on your Schedule C and pay self-employment tax just like if you were a sole proprietorship. Here's where the LLC really shines. You can choose your tax treatment. You're not stuck with the default. The most popular election is the S corporation taxation, and you'll use Form 2553 to complete that election. This can be a significant savings in self-employment taxes while maintaining pass-through taxation. You could also elect C corporation status by filing Form 8832, which might make sense if you're retaining your earnings or you're planning on bringing on additional investors. The key is timing. You generally need to make your election by certain deadlines in order for them to go into effect the following fiscal year. And some elections are harder to undo than others. This flexibility is unique to the limited liability companies and gives you the option as the business evolves to get more sophisticated. Here's a sample of what the 8832 entity classification form looks like, where you would select in part 1 how you would like to be treated if different than your default tax status. I mentioned earlier we would be talking about operating agreements. Your limited liability company's rule book is essentially its operating agreement. They're critical, even though most states don't require them, and without an operating agreement, basically state default rules will apply. And those rules may not match the intended purpose of how you want to structure the LLC. That includes percentage ownership, management structure, profit and loss allocation, distribution policies. So the agreement is essential, and you should absolutely have one, very similar to the discussion that we had in our previous lecture on partnership taxation. Now, it is recommended that even single-member LLCs should have operating agreements to document the separation between the member and the LLC. So let's talk about the liability protection of the LLC and how the LLC gives us some advantages that we don't have with the sole proprietorship or the partnership. So what's protected? Basically, our personal assets are separate from LLC debts. Our members' personal liability is protected, and it's limited to the investment, and protection from other members' actions also. What is not protected? Any personal guarantees or business loans where you have secured the debt. Personal wrongdoing or malpractice, failure to maintain the LLC formalities, or commingling personal and business assets. LLC liability protection is powerful but not absolute. Business professional assets are generally protected from LLC debts and obligations. If an LLC can't pay its bills, creditors typically cannot go after its members, a home, car, savings accounts, etc. Members are usually protected from other members' wrongdoings. However, some important exceptions, as we've discussed in the previous slide, personal guarantees being the simplest of them. So the LLC won't protect you from your own malpractice or wrongdoing. You must maintain proper formalities, at minimum, separate bank accounts, proper record keeping, and follow your operating agreement or state law if that's the default. By commingling your personal and business assets, you're essentially treating the LLC as your personal piggy bank, and courts may pierce the corporate veil or the LLC's veil and eliminate the liability protection. There is some potential legislation or litigation that is making its way through the courts, which potentially may weaken the strength of single member LLCs. And as a result, if you ask me to absolutely decide which the best business entity was, if you were going to be a single member LLC, I may suggest that you go with the S corporation option instead of the limited liability company, because of the potential of some liability that it's working its way, some case that's working its way through the court system that could potentially hamper the protection of a single member LLC. So while the LLC is incredibly flexible, not always your best choice, you can consider a corporation when you need multiple classes of equity with different rights. LLCs can have different membership interests, but corporate stock structures offer more flexibility. If you're planning to go public or seeking venture capital, investors often prefer corporate stock structures. If you want to retain significant earnings in the business, the 21% corporate tax rate might be better than the higher individual income tax rate under a pass-through entity. And corporate governance structures may also be better for things like employee stock option plans, and sometimes will enhance credibility of your company's credibility with large clients, investors, financial institutions. Consider staying as a sole proprietorship for a very simple, low-risk business when you're just testing the concepts, or a partnership in very similar situations when, let's say, you have a second partner like your spouse. The next mini lecture will cover corporations. We'll talk about both the C and the S corporation. Please subscribe and like the channel. More videos will be forthcoming. Thank you. Hope to see you soon.